If you are thinking of buying or selling in fall 2025, don't make a move without listening to this video. I'll provide you with fresh insights from the Urbanation report that is prepared exclusively for our firm. If you're a buyer, seller, investor, or just curious about where the market's headed, I can tell you to buckle up because this video is packed with data-driven takeaways to help you navigate this landscape. So stick around. By the end of this video, you will know exactly where the hidden opportunities are and how to avoid the pitfalls that you might see during the fall market in Toronto. So now let's dive in. Let's get started with the big picture. What's driving the market today? Hold on to your seats because the economic backdrop is wilder than you think. The Bank of Canada, of course you already know that, froze its benchmark rate at 2.75% for the third time straight on July 30th. That was a proof that our economy is tougher than expected. Unemployment is steady at 6.9% and the inflation is chilling at around sub 2%. But here's the jaw dropper. Mortgage rates in the low 4% ranges are now the norm. They are way below recent highs and the buyers are waking up to it. The Urbanation report screams that major rate cuts might not happen soon, and also economists say that we are near the bottom, but that's not stopping the action. Why? Because of the average prices, home prices in Toronto crashed 5.5% year over year to $1,051,000. That made homes more affordable than they have been in ages. It's like built-in rate cut. And get this, pent-up demand is also exploding on the other hand. Buyers sidelined by US trade drama are jumping back in. They are eyeing discounts and a massive 30,000 active listings on Toronto Real Estate Board, which is 26% more than last year. In condos alone, prices go 9% to $651,000, the lowest since February 2021. Strategic investors are gobbling up units from developers betting on the market's bottoming out. If you're a first-time homebuyer or investor, this could be the deal of the decade. But wait, there's more to this. Record inventory means buyer's rule. But for how long? You thought prices were the big story. Think again. This market is a buyer's dream, but it might not last. The Urbanation report drops a bombshell that the sales to new listings ratio jumped to 35% in July. The Urbanation report dropped a bombshell that the sales to new listings ratio jumped to 35% the past month. That's the year's high and up from 33% last year. So balanced markets are roughly about 45 to 55%. So at 35%, buyers are calling the shots at this point with 17,613 new listings, which is up 6% annually, and the sales not fully catching up. So active inventory exploded to a record 30,000 units, which is 75% above the 10-year average. That's a 5-month of supply, double the long-term norm and up from 4.4 months of supply, month of inventory last year. Imagine this, 30,000 homes just waiting for your offer. Buyers are leveraging this glut for killer deals, especially in condos with 6.4 months of inventory, more than double the 10-year average. But here's the twist that will keep you hooked. Not everywhere's steal. Semis, semi-detached homes, rows, and townhouses in Toronto with only 3.3 months of inventory, and especially in Toronto East, which is scorching a 2.8 month of inventory, basically are around the seller's market edge. Middle region condos, on the other hand, a whopping 6.9 month of inventory, which is almost 7 months of inventory, perfect for haggling down that $538,000 average. Sales are roaring back up too. They are up 11% to 6,100, which is a 4-year high. If you are buying, strike now before demand tightens. So for sellers, price sharp or get lost in the crowd because there are lots of opportunities out there for buyers right now. Of course, not in every locale and every area, but most of pockets in Toronto are facing a buyer's market. But what's the real shocker? The massive rush to cheap homes that's flipping the market upside down. Don't go anywhere because what comes next will change how you see GTA real estate forever. The shift to affordable homes, 125% sales explosion. Okay, this is the part where your jaw hits the floor. The GTA is seeing a seismic shift to budget-friendly homes and is creating winners and losers overnight. The report reveals that low-rise sales on the under $700,000 skyrocketed over 60% year over year, while condo sales below $500,000, they exploded 125% year over year. That's not a typo, 125%. This frenzy at the low end is dragging averages down, fueling that 5.5% overall price drop, but it's also proof that first-timers and investors are storming back to the market. If we dig deeper, we see that low-rise homes, for example, like detached, semis, and townhouses, saw month-over-month growth across all brackets under $1 million, with, let's say, under $600,000, they were up 11%. So for condos under $500,000, the sales 32% from a month ago and 125% from last year. So no wonder condo prices hit $651,000, which was 9.3% down, and detached homes were at 1.261, which were 5% down, and also semis and towns were about 4.9 or 5% down. These levels not seen since late 2022 or early 2021. So why is the rush? Prices are 21.2% off 2022 peaks, closing the rent versus buy gap. So investors spot the bottom with bulk buy signaling upside. But in the high-end market, it's brutal for condos over $1.5 million. They tanked 42% month over month. Low rises between $1.75 to $2 million. They were down 22%. So if you're chasing luxury, patience pays off. But for entry level, this is prime time. Miss it and you might regret it a few years from now. So what are the hottest spots and hidden gems right now? Toronto's semis and townhouses saw sales up 29% and prices barely dipped 1% to $1,088,000. Toronto's east saw 2.8 months of supply, means the buyers should act fast because it's getting closer to the seller's market, meaning that there's demand for that part of Toronto. So Pill's condos, as I mentioned a little bit earlier, they have about 6.9 months of inventory, which is 7 months of inventory, and the prices are down 12%. So meaning that you can go there hunt for bargains, and it's a bargain hunter's paradise basically. When you come to Durham region, Durham detached homes are at about $992,000 on average. They seem affordable, but low choices are gonna hurt the sales. So for buyers right now, high inventory areas such as Peel region for condos or 905 region for detached homes are a good haven in order for them to be able to hunt down enormous deals. For sellers, hold the condos if you can. They report hints 2-3 years from now there are going to be gains on that market. So if you are basically investors, in my opinion, you need to look at the pockets that right now have lots of inventory. So let's wrap it up. There you have it. Rates frozen at 2.75%, prices down 5.5%, inventory at record highs, and affordable sales are booming 125%. So fall 2025 could be your breakthrough or bust if you ignore these facts. I'll make it short. For buyers, negotiate like pros. For sellers, price it to win. So share this video if this video brought you value to you. Make sure to subscribe to my channel. If you need to book a consultation meeting with me, use the link down below. Thank you for watching. Don't forget, knowledge is your best investment. Until next episode, stay sharp.